Hi guys, I was going over the last Form 10K of Costco, and I was wondering how comes the stock seems to be so much overpriced. After all, the price-earning ratio is very high, at 42, like a tech company or a hot stock in AI industry. So, very strange for a wholesale company. Although the stock was very calm in 2021-2023, moving sideways. The stock almost doubled then. So, let's go over the financials to see if we can justify the performance of Costco on the stock market. First, the income statement. We can see the revenue expanded quite rapidly. Considering Costco operates in a mature industry, since 2023, the total revenue increased 14%. Not much, we're not talking about Nvidia here, but for a company like Costco, showing such an improvement is a big deal. And yeah, we're talking hundreds of billion-dollar. So even a very slight increase on the top line can result in a much better profitability down below. If we now take a look at the net income, out of $275 billion, we're left with only $8 billion. A little more than that. This is because Costco works with very low margins. What matters for them is the volume first, not the price. Indeed, Charlie Munger threatened to abandon the company if they were to increase the price of their hot dog. So, $8 billion of income. That's a 2.9% net margin here, and we have a very pleasant 28.7% increase since 2023. In fact, I checked at their record, and Costco has showed a continuous increase in revenue for at least 30 or 35 years, as you see on this chart. To me, this proves that the company's business model is a success. They have the formula right, and they leverage on it, expanding year over year. So let's jump in the balance sheet. We have $77 billion of total size, increasing a lot from 69.8. No magic. The company is profitable and the profits belongs to shareholder, so you have to record it in the retained earnings of the equity section. And considering we had $8 billion of profits, given the $29 billion figure we have here, this gives Costco a very juicy 28% return on equity. Remember this. It's easy to calculate, and it gives you great insight of any company's ability to generate income for its shareholders. The long-term debt of $5.7 billion is not a matter at this point for at least 3 reasons. The first one being they hold plenty of cash here, more than $14 billion. This is way enough. Second, Costco produces more than $8 billion profits, we said. And third, somewhere in page 52 of the 10K report, you have this table that gives you the maturity of the debt. And the thing is, what's due will only come in 2027, 2030, and 2032. This gives the company plenty of time to accumulate cash or to prepare to roll the debt. The inventories are slightly decreasing. That's a good point. The company engaged money to build inventories, buying food, tools, various things to sell, you name it, so the goal now is to liquidate. Sell as much as you can, with little profit on every item. But be careful. This figure is a tricky one. You want inventories to go down only if the size of the company remains the same. If Costco is expanding overseas, this would require them to build new shops, and this will participate to increase the overall amount recorded as inventories. So you need to deal with this number very carefully. Quick look at the cash flow statement. The company generated over $13 billion of cash, on which you have to subtract $5 billion and half of capital expenditure to get your free cash flow number. CAPEX is a very important number. You need to bear this one in mind. It represents the expenses a company needs to engage to maintain its tools, machinery, storages, and everything working, whether you get profit or not at the end of the year. And this number can really hammer the cash you get from operations. And over the $7.8 billion of free cash flow, Costco paid about $2.1 billion of dividends. This is a reasonable percentage, giving a very high level of confidence for us investors. And finally, this dividend came in addition to $900 million of share repurchase. So we have a high-quality company. The income statement is great. The revenue keeps adding every single year. The balance sheet is a no danger to me. The amount of debt is largely covered by cash and profits. The return on equity is a massive 28%, and the cash flow figures are clean. However, it seems to me the valuation on the market may be crazy. I wouldn't buy at this point. The fundamentals are really good, but they are not aligned with the stock valuation. I would give this company a price earnings of 25 or 30 if you want to. But price earnings above 40 are generally considered high risk. And over 30, we're talking about an overvalued stock. Somewhere around 20 seems plausible on average for any kind of company. Of course, all of this depends on the ability of Costco to grow again, and high price earnings may indicate the company has good prospects to keep growing. But hey, folks, don't take my analysis blindly. Make sure to go over the Form 10-K on your own to make an educated opinion on the company. Be aware my video is just a short format to introduce you to the company. See you guys for a new review very soon.